Hello and welcome to another episode of Digi-Tools in Accrual World podcast, brought to you by the Digital Disruptors. We cover all things wise and wonderful in the accounting tech world to help you cut through the noise of the busy app marketplace and figure out whether an app or a technology is truly a good fit for your practice or firm. Today's episode has been made possible by Adsum. John, tell us a little bit about Adsum, please.
Okay, Indy, yeah, I will do. So Adsum is a great little tool that allows you to connect to HMRC for all of your client taxes. So whether that's payroll, income tax, corporation tax, VAT, you can connect all of those into Adsum. It's really cool because if you've got lots of agent accounts, which larger firms will have, or if you've been a little bit acquisitive, you seem to collect them as you go along, you can actually add all of those accounts as well. So you get one single view, one single dashboard view of all of those clients, all of those liabilities, where you're at and with things. And for those taxes that are NITD, you actually get some even more granular data because you can see filings and when things are due. So for those of you getting ready for dealing for income tax, it's be really cool for you. As a little aside as well, one of the things that Adsum can also do is they can help you finance some of those liabilities. So sometimes we have clients that have a bit of a tax shock. Maybe it's a big VAT bill or something potentially unexpected that they weren't planning for or haven't planned particularly well for, and they can help fund that gap if you need to.
Brilliant. And also today, we're going to focus on a handful of other recent news. And you may have noticed that we're welcoming a new regular face to our show, to our podcast. Welcome, Eriona Bajrakurtaj. How are you? And thank you for coming on to join us. You're going to be one of our new regulars. How do you feel about it?
Thank you so much for having me. I'm so excited. Obviously, this is something new for me. Topics are something that are very close to my heart. And yeah, hopefully I'll be able to give some value and enjoy it as we go along.
100%. And why you is very much because you've gone deep into the QuickBooks world. And I think you can see that we've had you on a couple of times before and we really had to pick your brain, to be honest. So it made more sense that you came on and actually gave us a balanced view of what's going on the other side, because you're a QuickBooks hero. Is that a thing still?
Well, I'm part of the furniture pretty much at QuickBooks. But it's no secret that I do love QuickBooks. I've been working with them pretty much since we started with the whole digital fintech type thing world with our business. But yeah, hopefully I should be able to give, as you say, a balanced view and make it a little bit fairer.
Yeah. What I loved was, and John, I don't know if you saw this, Eriona was recently interviewed by the global CEO of QuickBooks, Intuit. And he said, about getting into accounting and how you must love it. And you said something so brilliant, which I loved. And I said, I think it's so relatable. You said, I loved it because my dad told me to love it.
Yeah, literally, like, you're going to love accounting because you're going to do this as a career. I was like, okay, I love accounting. That's how it started. To be fair, though, my dad was a major in the army. Okay, so when you're like given direction like that, you fall into place, even if it's loving things or not.
100.
You did love kicking him out though, didn't you? That was the best bit, right?
Well, listen, the thing is, he raised me to be quite a strong-headed and make decisions for myself. So I was like, is it your own fault?
Exactly. And we were talking about personality transplants just a moment ago, which John and I are keen to go on because you've been doing some fantastic work on self, would you call it, in terms of like how to unblock or unclog or even speed learn on some things.
Do you know, it got to a point, because I've taken on so much recently, it got to a point where it felt like it was becoming too much. And when I was younger, I felt like I had so much drive and determination to do whatever it is. I set myself a goal. I was pretty good at playing with my brain, if you want to call it that, from a young age. And I set a goal. I know what I've got to do, and I'm going to work hard towards it. And it just got to a point where I felt like I'm running out of steam. I need that boosts and motivation, and with so much going on, I just didn't know what to do first. So I went on this course called Love Brain. Now, my sister had gone on to it a year before, and she came back with a brain transplant, totally different person, but super calm and relaxed. And I thought, maybe now's the time for me to look into this. I'll be honest, I didn't believe in a lot of these things before, right? But I was like, I need to do something because I don't know what else to do. And it was a reminder of the things that I was already doing in the past, but just refreshed with other tactics like speed reading and helping with memory, but also going to kind of the core and unblocking things that are stopping us from progressing. And I just came out of that and I'm doing the same things, possibly more now, but it just feels so much easier. I'm calmer as a person. I think it's also translated at home as well. My kids are just like, this is amazing. I'm not of getting angry for little things here or there. Everything seems to just be flowing. So with those tactics, and it's something that you have to keep up and practice later on, but so far changed my life and I'm loving it. So I would recommend
Amazing.
everyone really do this.
That sounds awesome, doesn't it? Indy, if you were going to have a brain transplant, whose brain would you have?
This is so okay. It's got to be someone, maybe like, I'd love someone really chill, but then like, and spreads love. Dalai Lama,
Oh, that's very
calm,
cool.
zen. I want the zen.
Oh, nice.
Love
But
that.
we don't know, because like we don't know what really was going on in there.
What about you, John? That's interesting.
Oh, that's a really good question. I would probably go, I don't know, probably like one of the Greek philosophers, maybe, or one of the old, or like someone. I mean, I'm a big science nerd, right? So maybe someone like
Yeah, like this.
Michelangelo. He used to love drawing, and he's like had so many incredible thoughts about science. I thought it was very cool. And I'm not a very arty person, so I actually kind of appreciate that side of things.
Oh,
That's not what I would have thought you would have gone for.
love
Maybe
that.
I would have like kept it like slight. You know what? There's a lot of joy in just keeping things simple as well. You just think of someone that's like just
You were expecting me to say something like Dirk Diggler, weren't you? That's what you were expecting,
yeah.
Indy.
Anyway, right? Shall we crack on with some app news today?
Absolutely. So am I starting off then this week?
Yeah, let's do it.
So this week, a merger that says a lot about where accounting tech is actually really heading. So Dataswitcher and Movemybooks are joining forces to create what they're calling a global AI-enabled leader in accounting data migration. Now, between them, they've already handled more than a million migrations, quietly powering switches behind the scenes while vendors fight it out on features and pricing. Now, this deal isn't about headlines, it's more about friction, or rather removing it. And as platforms consolidate and accountants are forced to move clients more often, whether that's cloud to cloud, desktop to cloud, one ecosystem to another, migration has become a one-off pain to core infrastructure. The easier it is to move, the less power the incumbent softwares have. But what's interesting is the timing. Dataswitcher and Movemybooks are betting that AI-driven migration comes between the control layer underneath the whole ecosystem. It's been the ugliest part of business to date, and maybe finally a good use case for AI.
That's Result, isn't it? Is that the Result team as well behind it, John?
I'm
Do you
not
remember?
actually sure, to be fair, because I know that Dataswitcher are out in the Netherlands, so that's so it's interesting, I guess, that again, what we're starting to see a little bit in the UK market is European tech businesses investing in the UK market, and taking stuff over. It's a bit of a switch away from maybe the PE-backed acquisitions that we've seen in the past. And I guess the interesting thing of them being based in Europe is they've got access to a whole bunch of additional products that maybe aren't so big here in the UK. So this is an expansion of their portfolio, if you like, because they're very big into things like Oracle, Exact, Twinfield, some of those products that probably like sit on the periphery of the accounting tech space here in the UK market generally. I think it's a fascinating play, really, because you I'm not going to lie, but like you Movemybooks as a product that has been around for a long old time, and I was quite interested in sort of understanding their business quite a long time ago and figuring out whether or not there could be a deep partnership between an accounting firm from a sort of digital transformation point of view and what they were doing, because they had sort of preferential deals with the likes of both Xero and QuickBooks at one point in terms of encouraging people off desktop software. And so we saw that as an opportunity. Surprisingly enough, it didn't go anywhere, but here we are. I mean, I think this is a good deal for the Movemybooks team. They spun out of an accounting practice with some technology capabilities a long, long time ago. And so this is a good result for them because they must have been going for at least 10 years, if not longer.
Yeah, it is connected to Result, or at least there is some interlinking, because Aston Byfield is the CEO of Movemybooks, Dataswitcher, and also the CRO of Result at the same time. So I think there's some
Right.
link up there. But you're right. I think that this is, well, the thing that I like about it, and the question I have for both of you, is whether it's going to make it a lot easier for companies who are now in this era of AI and really choosing between and evaluating technologies, whether it's going to empower them to be able to take more ownership of their data and their books, and maybe even take that step that allows them to better utilize some of the other AI technologies and build for themselves a front end so they don't have to have a reliance upon any GL in particular.
I think with a lot of accounting firms, with the majority being in the small to medium size, right, they're already overwhelmed with so much tech. I don't know how much this is going to affect those so much. I think it will help those that are helping them become more digital and kind of look at their systems and become more efficient. I think that will be super useful. But in terms of creating their own GLs, I don't think we're there right now. I think that is something that will come in the future, and they're going to need time to integrate and generate those efficiencies, right, to make this a lot simpler for accounting firms to be able to get into that space. But I think we've still got quite a lot of time to get there, but we're heading in the right direction.
I'd agree. I think accounting firms creating their own GL is like it's a little bit like, why would you try and reinvent the car or the office or the desk or the computer? It's already there, and there are elements of sort of newer technology coming in. I actually think with this news, the AI lens that's been given to it is maybe a little bit of a distraction, because fundamentally for most accounting firms, when they're dealing with clients that want to switch software, actually it's real fundamental stuff. It's just a matter of handling the data effectively and getting it out of one system that's generally fairly locked down or difficult to get access to from a data perspective, and then moving it into something new, typically in the cloud. So the fact that users of Movemybooks, now part of Dataswitcher, have a broader catalog of products that they can move in and out of, I think that's for the benefit of everyone. And this is something that has been sort of probably in the sort of consulting space, if you like, from a transformation point of view, where your accountants like Eriona and myself have had to go to a specialist to be able to handle that data
I think so. What I would say, it's a little bit worrying for softwares, right? Because I think up until now, a lot of them have made it quite difficult to switch over from software to software, and they're quite confident in that once a client's in, it's going to be very difficult for them to move, especially with how difficult it is generally to set up a software from scratch. Now that's becoming easier. So they're going to have to start thinking of something else to do to keep those clients in, because now they can or will be able to switch so much easier than before. So it's going to be interesting to see what they come up with.
And this is how it should be, right? I mean,
Yeah.
it should be easy to, in the same way that if I want to go and buy a new car, it's really easy for me to switch from a BMW to an Audi or whatever brand your choice. That should be how it is. There should be no reason why you're locked into a product for a long term.
I've got something different that we can touch upon as well, and it's from Dext, who's made some big moves this week. A platform that's quietly turning bookkeeping into a full workflow engine rather than just a data capture point. So first up in their changes, they've launched a new payment feature, letting accountants and bookkeepers and their clients approve and send supplier payments without ever leaving the Dext platform. Historically, Dext was the accounting data accounting data in layer, let's call it, capture, the coding, the reconciliation. And the users jumped out to banking portals or payment apps or different softwares to actually perform the task in hand. Now you can group invoices, schedule runs, and push money straight from Dext, which closes a critical loop in the accounts payable that firms have been asking for and looking at outside technologies for the last few years. So early tests processed nearly £800,000, showing real practical demand right out of the gate. And building on that broader vision, Dext has also opened the beta of its AI agent called Dext Assist. I knew that it wouldn't be too far behind. And this isn't a canned chatbot, it's an intelligent bookkeeping assistant, or that's how they're positioning it, that learns your firm's patterns. So it learns your coding choices, field preferences, any client nuance that maybe you've defined, and then suggests categorizations and edits with explanations that you can accept or dismiss. Kind of like having a junior in the team running everything for you and send it for approval. It's the kind of context-sensitive automation that has eluded many general-purpose AI tools so far. So together, payments and AI agents signal a bit of a shift for Dext. It wants to be more than a document processor. And we're not really surprised by that because it was in the merger with Iris last year. So it looks like it's aiming for end-to-end bookkeeping automation and workflows that get closer to real autonomy without handing accountants out of control bots. The reaction from the profession, let's go to you, John. What do you think about this?
Well, I mean, for me, this is fundamentally just Dext staying relevant, right, in the market. All of their competitors are offering, at the very least, payments already. And so, this tie-up with, I think, Xero Wallets, isn't it, to power the payments, was something that had to come. To be fair to Dext, there's something that experimented with a long old time ago and had launched into products and then pulled back from. So they were probably actually the early pioneers of bringing payments into kind of the AP process, but for whatever reasons, backed away. And I think the Dext Assist functionality, again, in many respects, keeps them relevant with where the rest of the market is. But actually, it's almost like an extension of kind of some of the auto categorization functionality that they've already got in the product, but it's just a little bit more sophisticated. It does have some AI in there in terms of helping to kind of translate what the machine learning in the background has been doing into something that's consumable by the user at the front end. And actually, I haven't seen this because it's still in beta, so not everyone's got access to this at the moment. But actually, when you go through and sort of create guidance about how transactions or how information on those invoices and receipts should be treated, it is very, very complex. It's very in depth. There's a lot of detail you can get into, which I really like. And I guess maybe historically, one of the Dext's weaknesses, particularly, has been around those multi-line item invoices and actually being able to handle line by line data and categorizing it to different GL codes and doing that in a sophisticated way. It's been quite a manual process in the past. It appears, although obviously this is subject to testing and being able to see it in real life, but it appears that now you could make that super automated, which again really brings them back up to speed with some of their other competitors in the market, but also just keeps the functionality moving in the right direction.
Speaking of competitors, and one thing I'm curious about is, Eriona, how do you think it compares to softwares like QuickBooks and its own agent-like capabilities that they've been pushing out, coupled with obviously the ledger? They're in the same place.
Yeah, I mean, I think it definitely was required. QuickBooks does already do a lot of this within the software. It suggests, based on historical information, how you've coded things, what it could be. So it's great for the team to be able to keep some consistency. A lot of people don't necessarily use QuickBooks directly for their kind of receipt capture. They're still using third-party software like Dext. So when they've got that, they kind of don't necessarily use the AI element within QuickBooks because it's at the point of the information coming in. Dex didn't have that, so they were losing a lot of efficiencies there. Now that's come into place, I think it will be a game changer for the way that those businesses are working. It was really needed, and payments, so many other apps are providing that. So I would say they were slightly behind. Obviously, they were the leader in the quality of information being extracted, but they were behind in other features. So I think now this, coming up to where they should be.
Yeah, I think that's a really interesting point you make, Eriona. There were leaders on quality, but obviously the other functionality was missing. And do you think, from your perspective, what is it that you're focusing in on from your business? Are you interested in that additional functionality and maybe would take a little bit of a hit on the quality and the accuracy, or is accuracy kind of like the fundamental bit that you'd prefer to focus in on?
Accuracy is super important because this is where everything starts, right? If the data is going to be incorrect at this point, then all of our work is going to be a load of rubbish. So we need accuracy is super important. But I think now we expect more, right? With the softwares that are out. So we expect to have the other efficiencies available. And I think for us, where it's going to help a lot in our team is for things with expenses that could be classified in two different codes, for example, and some are classified in one, some are another, and there's some inconsistencies there. So I think this, if it suggests we've noticed that you generally code this to this code and start to align things so they are all within the same code, I think that would be super useful. for the team. Okay, so this week we've also got some information from Briefcase, and it's an interesting moment in AI bookkeeping, and the contrast really couldn't be sharper. So this week, Briefcase rolled out something deceptively simple, and that's letting users add natural language context when they upload documents. So, for example, a short note or comment like client entertainment or staff meal split across projects, and the system uses that intent to categorize, split lines, and apply tracking codes correctly. Now, why does this matter? Well, because bookkeeping isn't necessarily a math problem, it's more of a context problem. And that's where a lot of AI accountant stories quietly fall apart. At the same time, we've just seen other players in the space enter a distressed sale and new AI launch into the same space. There's big ambition and heavier AI claims, but real world accounting depends on nuance, exceptions, and human intent that models don't magically infer. But what Briefcase is doing feels slightly different. It's not replacing the accountant or the client. It appears to be tightening the feedback loop between them. Now, context is captured at source when the human still remembers why the transaction happened. And that's such a simple solution, but can make such a huge difference. I think that's where the subtle lesson is here. AI players that listen tend to survive longer than AI that declares autonomy too early. In this market, progress looks like fully autonomous bookkeeping and more like fewer follow-up emails, fewer miscodes, and systems that learn with users, not instead of them. So I think this is super interesting. I think it's going to be really, really useful for those that are kind of up to speed with the tech and they understand why they're using it, and they want to try and close that gap with communication with themselves and the accountants, who will come back and say, yeah, but what was this for exactly? Which project does it belong to? And so on. However, in my opinion, that's a very small segment of the market. The majority, they could write things of what it is and try to be really clever about it and code things when they don't actually understand where they should be coding it to, which could end up giving a hell of a lot more work for the accountant. I can see both sides of the coin, but the principle I think is absolutely amazing. And again, I think this will be something that people need to get used to. They'll be making mistakes, learning from them. Some will need to not get involved, and some will just be trained in, how to make those prompts, can we call them prompts, or description, clearer.
Can I ask about this for a moment in terms of where it fits in? And you were just saying that, look, we're seeing some things like falter in the industry where it comes to how AI or like the capture and how this will impact those companies. Does Briefcase go far enough in the workflow to be meaningful in its own right and stand up to its contemporaries, or are we also seeing that maybe this solves one small part, which at some point the bigger players will then end up extending to that as well? And so I'm just curious here that, like, does it, in its own right, does it need to continue building out more of our workflow to stay meaningful, relevant, and also alive at this time?
Well, it's small, consistent changes that make a big difference, right? So I think it's an important change, but do I think other players will kind of get there quickly? They may do. They may not see it as something that's super important, and that could be an advantage for them because it could make a lot of difference. But yeah, I do think they need to keep going and, as you say, extend that workflow to become super useful so people can't live without it, essentially.
Yeah, sticky, I guess. Yeah.
Awesome. Right. Well, I've got a big update from Xero, and I'm not going to go into the depths of this because they have slightly changed how they do their sort of product updates and stuff. And they did a quarterly update fairly recently in which they went through 55 feature updates and new releases and all sorts of other things. And I know that Ryan normally does this and rattles them off in no time. There is absolutely no chance I'm going to cover all those in detail because everyone does fall asleep and be bored. But let me just give you a little bit of a few highlights of what there was. So there was a whole bunch of stuff around AI and the development of JAX, which now seems to be turning into something somewhat useful rather than complete heap of crap that it was before. We've got new functionality being built in around analytics and reporting, which is a consequence of the Sift acquisition that came in a while back. We've got the launch of the new Xero Partner Hub, which is really just like this iteration and changes of XPM and trying to make everything within the Xero ecosystem a little bit more cohesive. They've clearly been listening to the guys at Intuit about that. And then they've also made some improved functionality around how you manage and process bills direct in the product. So outside of our whole OCR space that we're talking about. And then there's a few new layers of functionality around user access control, particularly around the inventory side. And again, interesting to see whether or not this is an element of something coming in from historic acquisitions, or whether this is just being built in because people want to manage how products, etc., are controlled a little bit more. And then some peripheral stuff around tax and the mobile experience, and a few bits and payroll and stuff, just adding in layers of ease or functionality that's probably been missing for a while. So that's a whole bunch of stuff there. I will move on because there's also something else that came out from Xero, which is more about AI trends and what they're seeing. And then maybe Eriona, you can pile in with your big green T-shirt on and tell us whether or not any of this is all any good, right? So, excuse me. What Xero have been doing, as we know, is they're trying to focus on the US market. They're trying to disrupt Intuit and FreshBooks and a few others out there. And they've been doing some research on what they feel is like global AI and US payments opportunities, interestingly enough. And perhaps not surprising given that they made that purchase a while back, which everyone thought was a terrible deal and overpaid for. But we'll see if this comes good. But essentially, what we had was a briefing from Sukhinder, who's the CEO, talking about where they're focused and what they want to do. And basically, their belief is that they're in a really good position to kind of work in the SMB market, to take advantage of the opportunities they've got as a consequence of the Melio acquisition, to really nail down unifying accounting with payments, with all the other processing functionality that they've got. I mean, I'm still a little bit, I'm maybe a little bit skeptical about this. I mean, particularly in the US market, having to disrupt a big beast like Intuit, it's obviously doable, but it's still challenging, I think, and not sure that they've got enough there to fully do that. But one of the really interesting things they talked about, though, was they've got some data on what they call key small business jobs to be done, and that they're saying that they have 2 million subscribers now benefiting from Xero's full AI features, and over 300,000 using Xero's newer Gen AI features, which were announced at XeroCon in Brisbane. And these jobs to be done that they're talking about is like how they're using the fundamental core engine of the product around data and the platform, and bringing this all together into one place. And then what they're looking at from a go-to-market in terms of how do they go straight into accountants and bookkeepers and help them to do more, which again, I think these comments is really fascinating because this doesn't reflect the experience that we seem to have had with Xero recently, where they're shutting down effectively the Xero ecosystem as a consequence of the API changes. They seem to have been driving a more direct-to-market approach as well when it comes to like business acquisition. And I mean, lots of people, certainly in the UK, would say that they don't feel like Xero are giving accountants and bookkeepers the same amount of love as they used to, and certainly not giving them the same level of experience, hand holding, and helping them to acquire new clients. So yeah, I feels like real mixed messages. I don't know if it's me, but anyway, that's where I got to with all this.
Just to come in on that, Intuit did that a few years ago, just before COVID, I think it was. They were all really big on the accountants and helping them because obviously there's a great market there for them to resell to their clients. And at one point, I think they got really confident and said, "Nah, forget the accountants now. We're going to focus straight on the market," and that was really bad for them. They had a real dip at that time, but they've changed and come back and focus now more on the accountants to help grow. So if Xero are doing that, from those that have done the same, it's not good news. But with them going into the American market, as you say, Intuit is a huge beast. I think, I don't know how recent this is, but the stat was that Intuit have 80% market share in the
Yeah.
US, which is huge. Being able to infiltrate that, obviously, as you say, can be done slowly and it will take years. But I think they were offering their software for free, right? To US
Yeah,
businesses to
yeah, they
get
were.
in there, which was really interesting. But yeah, also the Intuit platform in the US is way more advanced than what we have here. Now, I don't know whether the Xero version in Australia is also more advanced than the UK one. I don't know, but I think it's going to be quite difficult to infiltrate that based on what they do, because there's so much to that software.
Yeah. I
I'd
think
agree.
also, I think also with this as well, it's, obviously they've got this big push in the US, but Xero's early push in the North American market was Canada. And I think, speaking to a few people out of Canada, over the last few months, is they now feel like Xero have kind of just ignored that marketplace. The focus is on the US. And, I have seen Xero have a little bit of success there, but probably actually at the bookkeeping level. So they're not really getting in at the accounting firm level particularly well. I don't think they're getting very much penetration there unless it's really amongst the very, very small firms. And at that, ironically, that market play there seems to be around price more than anything else. And interestingly, that's like almost the exact opposite of what we experienced in the UK market, where Xero were predominant in the market, and we had Intuit coming in and basically almost giving away the product for free to accounting partners for a long old time, or getting significant discounts on the product to kind of encourage adoption.
What I would add is that from your beast of an update there, they did release 55 different updates. I don't know if that's just, that's a big impressive number for Xero. I think it's showing that it wants to be the workhorse platform for firms with the breadth and complexity in certain jurisdictions. Like you said, I don't know if that penetration will extend to deeper US tax workflows in the US and what QuickBooks and Intuit is doing out there. But if you zoom out slightly, you've got, different games being played here. If you look at what Sage were doing last week, and we were talking about how they're doing a lot more with AI in terms of embedding AI deeper into operational workflows, the inventory, supply chain, multi-entity environments, where the risk management and process automation really matters. So they're kind of taking a different stance, whereas Xero, from what you're saying, is doubling down on the everyday accountant sort of productivity tools, the smarter reconciliation, the faster bill management, sharper dashboards, building in things on the payment, and really deepening its connection with Melio, which again remains to be seen whether that was a good acquisition, but it's practical, visible, and immediately useful for small and mid-sized practices, as well as small and mid-sized businesses. So it does feel like slightly more agile, workflow driven, less like the enterprise level of resilience that's maybe some of the other platforms have got in depending on the jurisdiction. So I don't know whether we're just seeing something here where depending on the market jurisdiction, because as you said, Eriona, there's a big difference between QuickBooks' platform in the US versus what it is in the UK, and that still hasn't all come over and translated into the UK market. So maybe we're just seeing something of like Xero using different concept centers, concept countries as like a test bed for where it may want to go deeper on some of its workflows and some of its software, where in other jurisdictions, where, for instance, it knows in the UK, the accountant is king or queen, that, that there's like more of a focus in just the everyday, like I said, accountant productivity tools.
I think it needed it though. I think that's what everyone should be focusing. So if you make the everyday easier, then you can start looking at the bigger picture. Where I think what's really frustrating accountants is where a lot of the software are coming in at like, oh, flashy things. We've got AI. We're going to do this, that. It's like, yeah, but you can't sort out the basic things. So how am I going to trust AI level of your software? They're not going to. So building on that foundation and strengthening that then will give accountants so much more confidence in being able to then use the AI and other things that they're implementing.
Yeah, I'd agree with that. I think also, we are incredibly harsh now with these established vendors, not just Xero, but Intuit, Sage, and everything else. Partly because, a lot of us have experienced like what they were like in the early days and how they were so innovative, how they were creating interesting products and, doing something, genuinely groundbreaking at times. And I guess, we talked about this a few times, but, there is certainly an element of frustration within the accounting marketplace about what feels like a lack of innovation now. And that's kind of inevitable because these products are mature and there's only so much you can do. I guess, as you kind of pointed out, Indy, it's great that we're seeing so many product feature updates coming into Xero, for example. And many of them are genuine sort of like improvements, even if they're relatively marginal in what they're doing. I guess, my bigger challenge is just like it's the tone from the top. It's great that Xero are doing interesting things, and other products are doing interesting things, but actually, like, I just want real clarity about, what does Xero want to do in the UK marketplace? Do they want to double their size? Do they want to keep growing like they're doing? Do they want to focus in on a particular segment or sector? That's the problem. And whilst this big push in the US is obviously, like, a huge opportunity for them, it's also a massive distraction for their other markets. And we also know that, that as far as we're concerned, we think there are other great opportunities for them in other places as well. Comes with different challenges, but I guess it's like it's a matter of, like, how important is it really genuinely for Xero to break the US? Because it's going to take a huge amount of time and effort, and that's time and effort that's taken away from other places.
Okay, so really a topic which is really close to my heart is Nick Williams is leaving Intuit after 12 years. And that matters because his tenure maps almost perfectly onto Intuit's UK transformation. So he joined QuickBooks when no one really understood what QuickBooks was in the UK. And at that point, he was doing sales calls, product feedback, explaining why cloud accounting even mattered in the UK. And fast forward to today, we've got a full AI-led platform, deeply embedded accountant ecosystem, formal councils, trainer networks, and real UK influence outside of the US giant. Now, this isn't just someone moving on, it's a senior bridge builder stepping away at a moment where Intuit has real momentum. So there's real strategic question ahead. What type of operator needs to fill the gap when we're evaluating the role of AI in tech alongside the accountant? What's worth noting is the timing too. So Intuit's UK operation has just hit scale. The foundations are laid, and that's often where early leaders decide their work is done and when the next chapter demands a different kind of operator. As far as we know, it looks like a clean handover with no drama, but there is no obvious next move, and we'll see who fills that gap and what that tells us about where Intuit goes next. Now, I absolutely, when I think, when you see someone and they embody the brand that you work with, right? Every time that I worked with Nick, he was literally into it. He was amazing at listening and also really passionate about wanting to make the changes that he heard. And he has obviously brought Intuit to an amazing place now from where it started. I don't know who will be I haven't heard who will be taking over from him, but it'll be interesting to see now where the product will go now that he's gone, because I think there was a clear vision for us of what he's planning to do. He was always good at communicating that, and we were confident in, okay, that's what he's achieving for. Now, obviously, there's a new Intuit Accountant suite and loads of new features and AI layer within the software. There's still a lot to do within it, so it'll be interesting to see where they take that. But yeah, really sad moment because we love Nick.
See, I didn't know Nick that well, but I guess, as you say, Ariana, I mean, I think it's a really interesting point for Intuit, and I guess if we kind of reflect, we're just talking about Xero, right? We reflect on that. We've had two UK MDs now, we're now on to a third, and we've seen an interesting sort of transition between those two people, and I guess, what is it that you kind of want or expect from the new person that will come in and replace Nick? And actually, maybe before you answer that, how sort of truly influential was Nick in terms of, like, the UK product and making sure that the UK was served as well as the US market?
I think Nick was super influential, instrumental in the success of QuickBooks because those that he worked with believed in him. And there were times where the software didn't exactly do what we wanted, but everyone had faith that he was on it because he seemed so passionate and he's going to turn it around and make the changes that are needed. And I feel that he did that throughout and he always delivered. Going forward, I think it's so important for us to have someone like that again in that position. I don't want it to turn into like a corporate layer where they aren't really interested and it turns into numbers. I think having that relationship with the community, I mean, he set up the Accountants Council, which so many different apps now have, but that was instrumental in giving feedback and for us to understand where the product is going, to be able to influence and say, no, we don't need that feature because we could see what they're planning to work on. That's not urgent right now, but what we do need is this, and something they may not have considered. So they were able to prioritize and make changes that we needed. So I'm hoping that whoever comes in keeps that same vision, but obviously go further, but in the same kind of way. I don't know whether that's just me. I like that way of working, but I felt like it was the most effective.
Yeah, absolutely. Sounds great. Well, there you go. You're throwing the gauntlet down, Eriona, and I'm sure if you're still engaged with Intuit going forward, you'll be pushing whoever comes into that hot seat pretty hard. So, well, I can't wait for you to threaten them. That's all I'm saying.
Oh gosh.
Okay, moving on. Last little item of news, and then we're done. Woohoo! So you may or may not have seen this, but Xeinadin were trying to exit, trying to sell rather, and they were looking for a very very big number. They were looking to sell for £1 billion. So for those of you not familiar with Xeinadin, you've probably been living under a rock, but Xeinadin is basically a merger of a whole bunch of relatively small firms across the UK. There's 122 independent UK and Irish accounting firms that make up Xeinadin. They were backed by PE firm Exponent, who came in, I think maybe like 2.5 years ago. I just can't quite remember the timing. And they are generating like 100 million in revenue, so very, very big. I think that makes them, it's around about top 25, top 30 accounting firms in the UK, about 80,000 clients, 130 offices. So very, very broadly spread, very, very interesting times. I would suggest maybe almost in some respects copied kind of what Assets were doing in the very early days, but what Assets then pivoted to was getting into bigger accounting firms because they realized that scale created a problem. And I think fundamentally this is a challenge that Xeinadin have now realized when it comes to this sale, because it's fallen through. And the numbers are reported are like absolutely bonkers. I mean, it seems like they were asking for something like a multiple of between 15 and 17 times EBITDA. Assets last valuation by comparison was around about somewhere between 12 and 14 times. So this was up in the ante very, very much. And the reality is, like for most firms, probably you're going to get an EBITDA multiple of maybe somewhere between like 5 and 8 times EBITDA. And I think, probably, I mean, there's been lots of commentary on this, but I think probably one of the real issues for Xeinadin is that their perception in the market is that they are fundamentally operating more like a franchise. So they might have a national brand, they might have that recognition, but the reality is that they are still made up of lots of very small independent firms making their own independent choices. And I'm sure people from Xeinadin will be sort of howling at this, but that is the perception in the market, and no one is going to buy something like that if it feels like they're going to have to do all of the hard work in the back end to kind of fix aligning these practices into one place. Now, I know that there's people like my mate Russell Frainer there trying to work on the technology side of things. He's only fairly recently joined, but I would say, Russell, given the numbers, I hope you've got good options, because if you can make it work, you're probably going to double the value of Xeinadin, the actual real value, not the paper value that they're looking for. And so there's something in it for you, mate. But I think this is one of the challenges that we're going to start to see in the market. The PE market is getting to a place of like significant maturity here. And we know that, for example, Assets were potentially looking to exit a little while ago. They're highly likely they're going to roll over again, maybe some point next year. And valuations are getting big. Exits are more and more challenging as the PE market starts to sort of change the way that they look at stuff. And you've got to really be able to demonstrate that you've got a scaled business with the true economies of scale of having a unified set of organizations sitting underneath you, not just kind of like this disparate group of income generating business units which are operating in multiple different ways.
Super interesting. So you're saying that basically Xeinadin is more like the 5 to 8 in multiple rather than what they're pitching themselves at, which was
about 15 to 17. So way off.
Yeah. But isn't that very typical in this space? Haven't we seen this multiple times before?
We've not seen at that top end. Like I say, Assets probably the firm with the biggest PE backed firm with the biggest multiple. And I think if you talk to people at Assets, even they would admit that they still haven't got everything absolutely cohesively wrapped up in the back end. But they do have it. It's much better than Xeinadin. And what they promote outwardly and also what they talk about inwardly, and that's discussed in public, is a much more coherent, cohesive brand with singular buying points and all sorts of other stuff. I don't think Xeinadin have genuinely reached that level of maturity yet.
I wonder whether does this affect or worry those that have been doing the same thing at different ends of the market, not necessarily top end as much as Xeinadin has done, but seeing that theirs hasn't necessarily worked out as everyone expected, will that then have a knock-on effect for those that are at the lower end of the market that are trying to do the same kind of thing on a lower scale? That potentially mean that they may not get the multiples that they're looking for as well? Like, will that make them lose confidence?
Yeah, I mean, potentially. I mean, I guess, we've had Lucy Cohen on here before when, like Mazuma are doing a little bit of acquisition work in the market. Obviously, they've got a very particular brand of accounting firm and business that they want to go after. And I'm sure Lucy will have a very strong opinion on this, but I think for me, it's more around, and again, we've talked about this before, but ultimately, whenever you're dealing with an exit, particularly PE exit, you would, unless you're absolutely getting out, and that's quite unusual, you're selling 51% or 75% of your business at a particular value. But the real crux of this is like what happens at the future rollover in terms of getting rid of your remainder. How do you get rid of that 49% or that 25%? And how do you still realize the same equivalent value? Now, obviously, you're incentivized to help grow the business and, generate that value and everything else. But what happens if, maybe like we've seen with Xeinadin, is you've sold at a big multiple for 50% or 51%, and maybe we're not going to get that multiple anymore in the future. And so all of a sudden your exit doesn't quite look quite like it did on paper originally when you signed the deal.
That brings this week to a close. Thank you. Thank you so much for joining us on today's episode. We're really grateful for you tuning in. If you've got any feedback and you'd like to share with us what your thoughts are on the podcast and also our newest member, Eriona, then feel free to get in touch. You can find all of us on the socials and have a look at our latest website because you'll catch all of the shorts up to date on there. So if you want to search by subject matter, then you are welcome to have a look on there and give us a like, a thumbs up, or a follow on the socials. All right, we'll catch you on the next one.